Hello, everyone. I'm enTHUZed, an educator on the strength trading system, and we're back with our Bitcoin weekly deep dive. And we're going to start on Bitstamp on the weekly time frame. The monthly levels are marked here in orange. The weekly levels are marked here in yellow. And we're going to start with our weekly trading range, which is up here, right here at $48,234, down to the current, what I'm going to call a bear market low in the area of $25,401. Now, what's important to note on the weekly time frame is our bear market low zone here, which is between the weekly 200 period exponential moving average down to the weekly 300 period exponential moving average. Don't trust me. Take a look for yourself on the Bitstamp chart. Every bear market low in the 13-year history of Bitcoin has been between the weekly 200 period EMA and the weekly 300 period exponential moving average, right? What's also important to note is that Bitcoin has been trending the 3-month 21 period exponential moving average since its inception on the Bitstamp chart, which is right now around $22,885. So these are three levels to take note of if price continues to break the daily lower lows, which is the subject of today. So that's your weekly look. Let's go ahead and zoom into our daily time frame. Let's hit the auto button here. Now, if we continue to month to weekly lower lows, we got to look at our next monthly support down here in orange, which is $19,900, which is the December 2017 prior all-time high. All right, so on the daily time frame, what we're anticipating, we got to scroll back to take a look here, is if we look, let's go ahead and click auto here. Since the $69,000 all-time high, also our monthly level, the 21 period exponential moving average has always rejected price, or almost always, from the high down to the January 2022 low. Conversely, since the weekly level of $48,234, the daily 21 period exponential moving average has always rejected price, right? Now, this level is also confluent with the micro time frame 200 period hourly 200 period 2-hour exponential moving average. So you can start on the daily for your macro picture and zoom into the 2-hour time frame to get a little more detail. Let's go ahead and erase our squiggles here. All right. So what happened off the lows? The depegging of USDT and USDC led to this dragonfly doji. This is a bullish reversal candle on the daily time frame. We also, if we click to the weekly, we can see that we also had what we call a bullish reversal candle with quite a wick on it. Now, I've gone over this in live streams. I mean, what is the size of that wick? That was almost a 19% wick on this bullish reversal candle. Some of you may think that's a good thing. However, when we look left for clues, we can see that your extreme bullish reversal candles have led to further downside. So any bullish reversal candle, look left for clues. You guys can watch the live streams to go over this. Has led to lower lows. The bullish reversal candle with less than 10% of a long shadow has been the low that led to eventual higher lows. Now, this is going to take time to play out, guys. If we hide our drawings, you can sort of see that it almost looks like the weekly 200 period exponential moving average is like begging, pulling price to come back down here again at $27,240, right? So this is potentially possible, right? So if we go to the daily time frame and we look left for clues, so how long could this take, right? We always look left for clues in the strength trading system, right? Off of the May 19th capitulatory low, it took a full 62 days to grind the low out prior to going to daily higher highs, right? Also, from the the December 4th capitulatory low in 2021, it took precisely 62 days to print the daily higher low, right, and continue to higher highs. So if we look left for clues, we will not be surprised if it takes 30 to 60 days to print a macro time frame local low that could potentially go to lower lows or higher lows, right? So what are we anticipating on the daily time frame? Let's go ahead and erase this here. We have our low, which is confluent with the weekly level at $25,401, right? We currently have our daily lower high at $40,050. This is our daily level, right? We now have a daily lower high relative to the prior high of $31,411, right? So the big question we have now is this level here around $28,615, our daily high or low, is it set or not? So for this to show us that our daily high or low is set, we need to have the low, the lower high, a higher low, and confirmation of the daily higher high. So if this pushes up and kisses the daily 21 period exponential moving average, that would be a sign of a daily trend change, and then we'd have to see if we get follow through or not, right? The other way this could play out, let's erase our squiggles, right, is we have the low, the daily lower high, a daily higher low set up for yet another daily lower high, continuing to daily lower lows. Now, this would be similar to the price action back in May, right? This is how things played out back here if we look left for clues, right? So if we look left for clues, we had the low, the daily lower high, the daily higher low, the daily lower high continuing to candle close daily lower lows, right? So this is possible, right? What else is possible if we look through the December the December 4th situation, how it culminated, right, was the daily low, the daily lower high at the 21 EMA, a daily higher low breaking to dramatically daily higher highs. This is another way this could play out, right? So those are the two things we're looking for, and we can see that the daily 21 period exponential moving average is going to be key in letting us know which way is more likely. You can see once you had a big bull break above the daily 121 daily 21 period exponential moving average, we did have a back test and a hold of that level prior to double topping and then breaking down to retest the lows, right? So these are things to keep in the back of our mind. We always look left for clues, right? We always look left for clues as strength traders. Right. So what is the most likely scenario? Well, regardless on the first pullback, I believe it is more likely than less likely, whether it's candle close or wick low, that we are more likely than less likely to print a higher low relative to the wick low, regardless if we go to a lower low or lower high first. Right. That is the most likely scenario. Right. So if we zoom in, and we've had a lot of dynamic candlestick patterns happen. Right. So let's zoom in. I'm jumping around a little bit, my friends. I'm jumping around, but let's go ahead and zoom into the relevant time frame. The relevant time frame for strength traders is the time frame with the most interaction with 200 EMA with price, right? We can see that the relevant time frame now is the 1 hour that's had the most stiff bearish resistance on the 1 hour time frame. Price would have to get up and over like it's attempting to do now, turn the 1 hour 200 EMA into support and break to higher highs to challenge the 2 hour 200 period exponential moving average all the way up here, which is confluent with the current high, right? The current daily lower high. All right, let's erase these squiggles so we can go over these dynamic candlestick patterns here. All right. So what happened on a lot of coins, right? Bitcoin was an exception to this, right? But what happened with a lot of coins is we had the lows, we broke to a lower high, higher low, lower high, higher low, and we had an equilibrium style pattern, right? This sort of thing, a tightening of a trading range that's considered to be a neutral candlestick pattern with a 54% chance to break in the direction of the trend. We know the direction of the trend is down, right? So what happened with many coins is that we had a dynamic candlestick pattern shift into more of a falling wedge style pattern. So if we take a look at this, so we had a neutral candlestick pattern, bear break with a lack of follow through into more of a falling wedge style candlestick pattern. So this falling wedge style candlestick pattern, when there's greater angles depending on the coin, is a bearish exhausting candlestick pattern that is statistically more likely and less likely to break bullish, right? So if we get a bull break out of this falling wedge style pattern, I said these are much more severe on other altcoins or more of a dramatic angle. The first place we're taking a look yet again is this daily 21 period exponential moving average for resistance on the first back test, right? So what else is going to give us clues if we do get a bullish bounce approaching the daily 21/200 period exponential moving average, right? Well, we can zoom out. Let's zoom back out to the daily. We know that we're anticipating this daily 21 period exponential moving average to be resistance, right? We can hide our drawings and really visualize that, right? So what we can do is we can take our Fibonacci static resistance levels. Let me zoom in so you all can see, and I can swing from the high to the low. We could extrapolate our Fibonacci isolated retracements, Fib ISO right here, right? Now, what do we know as strength traders? Each one of these levels has statistical probabilities associated with it, right? Your 38% retracement is your most bearish retracement level, this yellow line here. I'll do it on this side so you guys can see. So if we extrapolate out this 38% retracement, we are more likely than less likely to break to pivot lower lows. So price squeaked above the 38% retracement, right? What's another time price squeaked above the 38% retracement and ultimately ended up breaking to lower lows? Well, let's take a look. Let's take a look right here. If we go from the all-time high down to the weekly level, we can look left for clues. The prior on the weekly level, the weekly time frame, the weekly level closed right at the 38% retracement. This was unresolved bearish price confirmation breaking to pivot lower lows. The statistically most likely scenario broke out on the weekly time frame as I just demonstrated, right? So let's zoom back into the daily time frame. So what we have to keep in mind is price needs to get firmly up and above $30,997. Let's just call it 31K on Bitstamp to make it less likely that we're going to break the pivot lower lows. Not only does price need to do that, right? Let's go ahead and erase our squiggles one more time. Well, we have to take a look at what we call the bear zone, right? So we highlight our Fibonacci static resistance levels, and we highlight the bear zone. Let me show that to you guys. Is the 38 to the 50, right? So if we look at our Fibonacci isolated retracement levels, your 38% retracement is statistically more likely and less likely to break the pivot lower lows. Your 50% retracement I coin is the bear hammer, right? If price pushes up to the 50% retracement, let's go ahead and visualize that, the bear hammer, and gets rejected, right? If price does push up and get to the bear hammer and get rejected, we are more likely and less likely to challenge the prior lows, but not necessarily break the pivot lower lows. So what we're clearly seeing if we're zoomed in here is price needs to get firmly above the prior monthly level at $32,950, pull back and hold a back test to make it more likely than less likely that price is not going to retest the prior lows. So anything below this bear zone, we are more likely to take a trip back down to the lows and retest them, whether it's breaking to lower lows if we get rejected off the 38% retracement, or re-challenging the lows if we get to 32,700. So 31K, we're breaking to lower lows more likely. If we get up to 32,700, we're more likely to re-challenge the lows. Hopefully that is clear with you all, right? So let's see what else could we go over here on Bitcoin. And you guys should be prepared for both bullish and bearish scenarios, right? The other thing we need to take a look at is this 4-hour 200 period exponential moving average. So you know that if you're a strength trader, you know that we identify bullish and bearish price action with support and or resistance on the 4-hour 200 EMAs. You can see that we get pull back below the 4-hour 200 EMA bear flag and dramatic bearish follow through, right? So the most bullish scenario, if price gets up and over the daily 21 period exponential moving average and continues to push higher, I think we can highly anticipate a push into the 4-hour 200 period exponential moving average and a rejection, right? So we know this is going to take between 30 and 60 days to play out. So visually speaking, if we look forward in time, you're going to have confluence with the 50% bear hammer and the 4-hour 200 period exponential moving average, visually speaking, in about a week. So around May 28th or May 29th, if we get continued stair-step bullish price action, we can anticipate contact with the 4-hour 200 EMA dynamic resistance level and the 50% bear hammer. This would be the next place we would take a look for resistance. And then this would give us the most likely scenario of re-challenging the lows, but not necessarily breaking the pivot lower lows. So that's what I got for today, guys, on my quick and dirty Bitcoin weekly deep dive. Thanks so much for watching, and we will see you all on the next one.